Morning, Fractal Effects team. Before we get started, please make sure you check out the disclosure on our website, fractaleffects.com. We're just in the middle of the morning session here still. If you're joining along with us, make sure you're doing a demo account, as this is for educational purposes only. We are not financial advisors, and this is not financial advice. So we had a quick trade in the morning, very quick, based off of divergence. So even though we have a downside expansion model, we have a mixed model buy, we broke the manipulation range to the downside first. And we're using Brent crude oil here as our divergence. Now Brent crude oil had a double break to the downside, which let me know that at the very least US oil was going to come down into the DSD and potentially sweep London lows. But we took our TP right at consequence encroachment of the DSD. Just one second. Sorry, I just needed some water there. So we took our TP at the consequence encroachment there, midpoint, and that was it. So that was the morning setup. Now keep in mind this is non-farm payroll week, so even though we're keeping an eye on oil, you got to proceed with caution regardless of any asset. So we're avoiding all US related assets currently. So after hitting this DSD, we have not created a 5M fair value gap yet, so we're looking for one of two things now. Obviously, we're going to wait for confirmation since we're only 3 minutes away from the spotlight confirmation. Sorry. So yeah, we're looking for one of two things here. We're either going to get a green, a bullish fair value gap in here on the 5M, which we will hopefully take to take out the highs and get the bullish confirmation. Or we'll bounce off of, there's our NYC fair value gap, that red one right there. I just have a bigger one since it became a breakaway gap. I just marked the other one below it as well. We could bounce off that, get a bearish 5M fair value gap, which would then indicate that this thing wants to push down since we're sitting inside of a blue zone anyways. That matched with confirmation, and that'll be your directional bias for the day. There's your lows down here, there's your highs depending on which direction we confirm. But just a waiting game right now, just watching patiently to see which fair value gap forms first. So our range is fully formed now, and we're tapping right into the NYC fair value gap. Let's see what happens here if we get over it and create that 5M bullish fair value gap, or if we reject off of it and create that bearish fair value gap. Okay, now we're punching past it, tapping another blue zone here. If you're wondering why we're even looking for a reversal, if we have a double break to the downside, isn't that the dealer revealing their hand? Isn't that the directional bias? It is. Remember, a buy model is only a buy model until it's not, and a sell model is only a sell model until it's not. That means when it's hit that higher time frame objective, be it sweeping liquidity or tapping a inefficiency, it then wants to reverse. It's already accomplished its goal. It was a buy model, and now it's not. It was a sell model, but it's completed its objective, and now it's not a sell model. So when you're looking at divergence, even if things are not paired up properly, like for example, there's the DSD low on Brent crude oil. Here's the DSD low on US oil. But at the same time, this was the daily liquidity, not previous day liquidity, but daily liquidity. So on the daily time frame, there was some candles that wicked down here. So just as Brent crude oil took out daily liquidity, right at the same time, US oil hit the DSD low. That's how they keep these two in alignment. Even with divergence, you're still going to be able to pair up a higher time frame PD array. It just might be a different one. DSD low, DSD high, these are higher time frame PD arrays. And it swept liquidity at the same time. Now we're above the DSD low here, but we're wicking off the New York fair value gap. Same thing for US oil, we're wicking. We're waiting for a 5M fair value gap. That's what's going to show us what direction this thing really wants to go in. Just depends on which one we're going to get first. Right now there is no 5M fair value gap in here. And since we did get a double break, we need more confirmation that this thing actually wants to push up. It would have to get over the NYC fair value gap. It would have to give us a 5M fair value gap and a bullish confirmation. That would let us know. Let's get rid of some of these areas here that we've painted out from the earlier session. So there's our DSD high. We're also coming right into that now. And here's our fib of the entire range from Asia high to London low. We're sitting, we already rejected off of 79%, which is right where the manipulation range high is and the end dog. Now let's just wait and watch. Getting that push down now. As we can see, obviously, oil has been bearish for quite some time. All across the board, only the 1M is bullish. So the only reason I'd be interested in even potentially looking for any kind of a buy is if we get that bullish confirmation first. And then even then, I'd honestly like to see a double break to the upside. There's our manipulation range right there. It's sitting inside of a 4-hour fair value gap that was created just in the morning session, which it did tap briefly. Now we're wicking off the blue zone, London fair value gap. But 1 minute left in this candle. So right now they're engineering new liquidity. There are some people that are going short off the NYC fair value gap. And then there are some people that are going long, possibly off of a 1M fair value gap in here, thinking that this market wants to push up. Remember, we're just waiting for confirmation. We're not going to get stuck in this struggle back and forth. We'll let them figure it out. For us, it's clear cut. So we do have a violated DSD high as well. I don't usually like to see a DSD high like this when you have a downside expansion model. It's best to trust the clean DSD. Look at this rejection right off of it. No body closed below it. This is a stronger indication that the market wants to push up. But again, we're bearish. Downside expansion model. It's going against a lot of things. That's why I want to wait for that confirmation and a double break of the manipulation range. You can believe that they're going to hold it up here for a bit. And on Brent crude oil, we're right at that DSD. Remember, this is another one of those highly algorithmic zones. This is usually where the market has exhausted. Not always, but majority of the time, the DSD is usually the daily target. It's exhausted its objective in that direction. Now here we have that divergence where this DSD is above it, but even though we swept below it, now we're still just gesticulating at it. And this DSD low, again, we rejected right off of clean. So let's see what happens next. But we're not going to get stuck here. That's why our strategy is set up the way it is. We don't worry about the minute by minute minutia here. Let the algorithm. And then when it's done, when it's fully cooked, and we have our directional bias, then we'll proceed then. Now here, if we do get a bearish confirmation and leave a 5M fair value gap open, I'd actually be very, very comfortable taking that sell, just because that would constitute as a third break in the same direction. We would have broken the DSD low, just like we did here. We would have gotten that 5M bearish fair value gap and a bearish confirmation. That's a lot, not to mention a downside expansion model. That's a lot of points of confluence. And we've been bearish for a very long time. Still a whole bunch of nothing, bouncing off the blue zone here, bouncing off the DSD on Brent crude oil, which we're using as divergence. Also a sliver of a blue zone down here. So after we had that double break, this is technically the first retracement. So that's why if we get another reason I should say, once we get a 5M bearish fair value gap and another break, this thing is going to drop most likely down to this daily liquidity, since we're well below previous day's low. So there was a 15M fair value gap in here that we had marked out as well. We can take that off since we've already hit the higher time frame objective. So I've marked out an inverse fair value gap there, coming in from the leg that dropped. We never left a bullish fair value gap. One minute 34 seconds left in this candle closure. I get the feeling we're going to push past this and head down here. No 5M bearish fair value gap created either. We might get one on this next candle. Now let's see if this fair value gap stays open in the next 5 minutes. If it does, that will most likely be the foothold. After confirmation, I mean. Remember, this late in the game, you want all the confluence you can get. So our 1M finally turned red. We're red across the board. We just need that 5M fair value gap and that confirmation. Because this DSD, this is a powerful zone. I've seen multiple candles wick here and then finally head up. Little under 4 minutes left. I want to see this stay open. Let's see if this confirmation sticks on Brent crude oil. This has been the weaker of the two pairs. Makes sense for this to get the confirmation first. Two minutes, 43 seconds left. So we did take out the lows here. About 7 minutes away from 11. After we conclude with this, we'll take a peek at NAS just to see how it fared on this heavy news day of this heavy news week. I just want to see if our strategy, I always like to look back and see if our strategy, or how our strategy would have performed, even though I will never mess with it. So now we've got 33 seconds left. Let's see how much of this fair value gap stays open. Just want to see a foothold. And it's right there at the inverse fair value gap as well, which is another good sign. Since we've already done what we call an early retracement back to the EMAs, this thing could move fast. That's why this has now become our area of interest, this fair value gap. Because once it taps it, and we get a confirmation, it might not create another one until like we get down here. Another fair value gap, I should say. I'm hoping it uses the midpoint here to then take one shot up here, reject, and then drop from there. Got to keep an eye on Brent crude oil as well. Get this 5M fair value gap, maybe tap, just wick the blue zone, and then drop. Okay, now we're back at that fair value gap. Let's see what happens here. So that 5M was a little bigger than, obviously we're just looking at the inverse here. Let's mark that out as quickly as possible. So that was the full 5M right there. Heading back up to the 20 EMA. 23 seconds left. Let's see if we disrespect this zone. There's also a blue zone here on the 1M as well. We want to see a bearish 1M fair value gap be created. So we got a lot of candles closing above. So this fair value gap is now disrespected. We just created or we're in the process of creating a 5M fair value gap, a bullish one. So this is rare. This means that on the 4-hour, like if this thing starts driving up, we wouldn't even be interested. This is actually very rare. Usually the 10 o'clock candle rarely sets the high or the low for the day. It can if there's a news drop, but again, it's rare for it to set the high or the low and then reverse. Usually it's a continuation candle. So what we did was we swept the low, and now it looks like it's driving up, but yeah, this late in the game, if we get a bullish confirmation, I'm actually not interested. The second it swiped down here, I was interested in a sell. But if it drives up or it closes above this red line, and by close I mean like if we get the confirmation and it's above this line, that will invalidate this trade. I will not be interested. It's 1 minute, 17 seconds left. even when you can call where it's going, as mentioned before, we don't want to chase the market, right? So even if I know where it's going, it just depends on if I want to go there. Almost look at it like a relationship. You know, if your girlfriend or your boyfriend is telling you, let's go here, and you don't want to go for whatever reason, you got to trust that feeling. Same thing here. Just because I know it's going there, like for example, if we get that bullish confirmation, to me, sticking to my rules, that just invalidates this trade for me. I do not like to see a 10 o'clock reversal, especially when everything is telling you that it's bearish. On a non-farm payroll week, no. I'd rather just sit out. So we're leaving this 5M fair value gap open. We're now back at the DSD high and another clean rejection off the DSD low. If it was any other day, usually what we do is when we get that rejection off the DSD low and we get a 5M fair value gap, that's safe to take, especially if you're above the blue zone. And by safe, I mean it falls within our risk parameters, our risk to reward parameters. It falls within our higher probability, 70% or higher probability, but not on a day like today. This is where it gets muddy. When the DSD high and the NYC fair value gap are right on top of each other. Let's see if we get that bullish confirmation and we break the manipulation zone to the upside. Now we're back at that DSD high, coming in contact with the 238 EMA. There's also a 4-hour fair value gap right above. There's top of our spotlight range. Let's see if we get that bullish confirmation. Now keep in mind, I've said this before, the higher time frame objective, if we were bearish, you could say that it was met right here after we swept out these lows. So a reversal technically, and especially bouncing off the DSD low, which is usually where the market gets exhausted by the time it hits this, you could frame that this is prime to take that buy, but again, look at this. And look at what week you have. This is what prevents FOMO for me. Like, there's some things that are just obvious. If I expect something to happen and it doesn't, I don't want to I mean, you got to be flexible enough to change your bias, but again, that's only if there's enough confluence in your direction. This isn't worth it. Downside expansion model, so what? Just because we get a, let's say we get a bullish confirmation here, I got a red box, I got a downside expansion model right across the board, non-farm payroll week. I'd rather just sit it out. It's not worth it for me. So as soon as we get a bullish confirmation, which it looks like it could possibly give us, I'm just going to switch over to NAS and just kind of go over today's setup. But again, I'm not interested in this. I'm not interested in US oil suddenly becoming bullish. 2 seconds left. Let's see if this confirmation sticks. There you go. There's your bullish confirmation. Bounced off the DSD low, left these string of 5M fair value gaps. I'm just not interested because there's a 4-hour fair value gap right here. So on the higher time frame, if we just swept 4-hour liquidity down here, and here's your first 4-hour fair value gap, it could technically just tap there and go down and drop again. I think it's going to be one of those days where it just ranges back and forth. I don't think we're going to get too big of a break. I don't think we're going to get over this 4-hour fair value gap. That's why I'm not interested in this bullish confirmation. Just because you get a confirmation doesn't mean you just jump in blindly. Do your top-down market analysis. What is it doing on the higher time frame? What's the market like to do? It sweeps liquidity and then it fills in an inefficiency. Look at this. There's a 4-hour fair value gap right here. We just swept liquidity. I hate, this is what I didn't want to see. I didn't want to see a 10 o'clock reversal. 10 o'clock reversal, that's usually an invalid day. And all it could be doing is coming up into this 4-hour fair value gap and then dropping again, or just gesticulating and consolidating for the rest of the day. Because once it hits this inefficiency, sure, it could go up and take more liquidity, but then it could also take liquidity from down here. Let's go back to the 5M. So even though we got a bullish confirmation, it just does not fit with my higher time frame market analysis. I don't see us getting over this 4-hour fair value gap and this end dog. And again, if it does, fine. I'm still not interested in a buy on a non-farm payroll week when you have this much confluence telling us that things are bearish. And it's mostly this. It's mostly the 10 o'clock candle. The 10 o'clock candle setting the low, I don't like that. If we had just clean bounced off the DSD and then created a 5M fair value gap and tapped it, that would have been fine. The fact that 10 o'clock swept the lows, that's rare, as mentioned before. Usually the only time you see 10 o'clock set the low or the high of the day is when there's a news drop. You'll see a big wick happen when those 10 o'clock news drops. Outside of that, these moves are rare for the market to just start reversing at 10 o'clock or after 10 o'clock. We're still at the DSD high here, but we're on the other side of the consequence encroachment. And there's your 4-hour fair value gap that we were pointing out. I can see it getting up into here, but there's also our manipulation range right there. That's the manipulation range high the indicator paints out for you. So it's sitting right at the consequence encroachment of the 4 hour. You could easily just tap that and then start dropping, and maybe even finish the day off inside the range. We'll give it another candle or so to see if it gets up here and if it rejects. And then again, we'll do a quick recap of NAS, and we'll call it there. Let's see if we can't get up into this 4 hour in this next candle. So we did come back into the dealing range. We get rid of all these fair value gaps and areas and zones. So there's our dealing range. And there's our inferred dealing range. So we could tap this fair value gap and get up there. Most likely to the end dog. But as mentioned before, just not interested. And this is where most traders fail. They don't stick to their own rules. Have your rules. I don't even have my rules written down. I actually have it in a voice recording that plays in a loop. So when I'm trading, I have my headphones on and I can hear my daily rules, because writing them down, you might skip one, or you might read it in the morning and then not be paying attention. I have it on a voice recording that literally plays, and I have that voice recording all primed up on my computer. It's in the left-hand corner. As soon as I turn my computer on, it's already up there, it's already on. I just got to hit play and hit loop, and it just keeps playing. And it goes over everything, every single one of my rules for entry and what to look for. And even though I listen to it every single day, and even though I listen to it multiple times a day on a loop, if it wasn't there, even I would randomly forget, maybe one step, or get FOMO. That's why it's more concrete when you hear your own voice speaking back to you. And I'm not just reading these rules, I'm literally giving myself directions. There's cadence, there's tones. Don't do this. Wait for this. It's almost as if I'm chastising myself, but that's what's required. That's how strong FOMO is, that you're never free of it. It's almost like an addict. You're never going to be 100% free of something. You can only avoid something. So if I can't avoid the markets, that's why I need that strong affirmation in the morning. I need to reaffirm myself of what's going to happen next and what my rules are. Now we're tapping that 4-hour fair value gap. We still have no confirmation on Brent crude. We're under the 238. As mentioned before, Brent crude is the weaker one out of the two. This is the one that did the drop first. This is the one that swept the liquidity first. I just want to see a tap up in here. And then let's see if we have any time for that NAS analysis, like a quick recap. I'm going to make this my last candle here. Let's see if we get up in here. Tap this. And then we'll jump onto the NAS. Got a minute left in this candle. Let's see if it spikes up here. For all I know, we could just be dropping from here. We're coming in all the way down to the 20 EMA. So we're just going to take a look at NAS real quick just to see how our strategy would have performed today. Obviously, we were avoiding NAS. Let's take a look. So we had a slightly upside expansion model coming into New York. And with the blue zone, it was a sell model. Our range formed well below here, well below previous day's low, that yellow line. Yep, so that's previous day's low. We had already taken previous day's, oh no, actually, sorry, that's previous day's high. So we had already swept out the liquidity here. Now, what's the first thing we did? Our range high is all the way up here. That's the manipulation high. Remember, the indicator paints that out for you. And here's our manipulation low. We broke low. Let's see if we had a double break. We broke low, took out the high here, and there's your second break. Now what set the low? Is this candle's low? 11.63. $13.08. So same thing. 10 o'clock set the low. 10 o'clock set the low, which is not what we like to see. So we hit a 4-hour fair value gap here. Now, this was our expansion candle. And 7 o'clock, or sorry, 10 o'clock. 10 o'clock is where we like to see a continuation. And instead, 10 o'clock set the low. And now it's making its way all the way back up, filling in this. I'm assuming this was probably the news. Let's check the Forex factor really quickly. So we had 10 o'clock news. So it's the news that pushed it up. Bullish confirmation. And again, another invalid setup for me when you're this bearish and 10 o'clock sets the low. I'm not interested. I'm trying to see exactly where the market goes. Now again, news, it's fine to set the 10 o'clock low or high if it's based off of news. But at the same time, I personally don't like to see that kind of a pullback. when, as mentioned before, 10 o'clock is usually a continuation candle, not a reversal candle. But we'll conclude our session there. We'll be live again tomorrow, focusing also on just oil and doing some market analysis. Have a good rest of the day.